Oil's price seems to have interrupted its upward movement with bearish tendencies yesterday and during today's Asian and early European sessions. In today's report, we have a look at the state of the US oil market, the crisis in Lebanon's southern border, and the market expectations for a possible increase of Saudi Arabia's oil production levels. The report is to be concluded with a technical analysis of WTI's daily chart. The US oil market seems to be tightening given the released indicators in the past 7 days. We make a start with the release of the US Baker Hughes active oil rig count, remained unchanged, implying a possible easing of the demand side in the US oil market. The release had little if any effect on oil prices, passing unnoticed. On the other hand, on Tuesday we got the AP weekly US crude oil inventories figure. The release showed that oil inventories dropped by minus 4.3 million barrels. It's a drawdown which was wider than expected, being slightly bullish for oil prices upon release. Similar signals were sent to the market on Wednesday as the EIA also reported a wider than expected drawdown of minus 4.4 million barrels. Both releases tended to align towards showing a tightening US oil market, given that production levels were not able to catch up with aggregated oil demand in the US. Should the tightening of the US oil market be maintained or tighten even further, it may have a bullish effect on oil prices next week. Yet despite the tightening of the US oil market, oil prices dived on Wednesday and during today's Asian and European sessions. Hence, we should be looking for another fundamental issue affecting the markets. News hit the market that Saudi Arabia is preparing to abandon its $100 per barrel price target in a signal that Saudi oil production levels may rise in the coming months. The news tended to intensify market expectations for a possible abundance of oil in the supply line of the international oil market, given that Saudi Arabia is the world's biggest crude exporter. The issue gains on interest as next week OPEC Plus is to have its next ministerial meeting, and the prospect that the issue may be magnified is enhanced, thus weighing even further on oil prices. Staying in the Middle East, we also note the escalation in the military conflict between Israel and Hezbollah, with the Israeli Air Force pounding Palestinian positions in southern Lebanon. Intel states that Hezbollah is preparing or has already declared war on Israel, and the situation could evolve into a regional conflict in the area, at which the oil market is particularly sensitive. Should we see also Iran being directly involved in the possible war with Israel, we expect some bullish tendencies for oil prices, as international oil supply lines could come under increased threat, considering also the Houthi rebels further in the south. Furthermore, we also note that Libyan supply may return, intensifying further market expectations for an increase in the supply of the international oil market. As per Reuters, a United Nations statement on Wednesday said delegates from divided Libya's east and west agreed on the process of appointing a central bank governor, a step which could help resolve the crisis over control of the country's oil revenue that has disrupted exports, thus unchaining oil production in the North African country. The issue is expected to have further bearish effects on oil prices should it be realized. WTI's price action dropped yesterday and during today's European session, putting the $68 support line to the test. We tend to maintain a bearish outlook for the commodities price action, given also that the RSI indicator took a downward turn and has started to aim for the reading of 30, implying that the market sentiment has started to turn sour. Also, there is still some considerable distance to the lower Bollinger Band, implying that the bears have ample of room to play. Should the bears maintain control as expected, we may see WTI prices breaking the 68 support line clearly and take aim of the 64.70 support level, while even lower we note the 61.5 support barrier. On the flip side, for a bullish outlook, we would require WTI's price action to reverse direction, regain the losses made yesterday and today, break the 71.15 resistance line clearly, and start aiming for the 75.5 resistance level. We hope that you found this report useful, and from all of us here at IronFX,